Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Monday, October 14th, 5:42 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with the Revere Roundup Daily Market Insight video. Market state, we're in an uptrend. As you can see by the trend gauge in the upper right, we are in grow mode, our flagship portfolio named GROTECTION. When the market is in our favor, we are doing everything we can to grow the balances for our clients, because the trend is your friend until the bend at the end. And if when the trend changes, can change across different time frames. That's why we track three different time frames, as well as what markets are doing. When that changes, we slowly can shift from growth to neutral to protect mode. We keep you updated on how that's happening in these videos every night. But as for right now, market leadership acting great, and the major index is trending above their short-term 21-day moving average, medium-term 50-day moving average, and long-term 200-day moving average, just like they were last week. Ride the wave. That's what happened today. Broad melt up across small, mid, large cap, and also across growth and value. Sometimes, very often actually, over the last couple of weeks, our afternoon calls, we have two big calls, one in the morning to review in depth what we're all looking at, potential buys, stops, and portfolio positions. And then in the afternoon, what jumped out to us during the day, and ride the wave. Sometimes we just get on and say ride the wave, and the call's over in 5 minutes because we're positioned the way we should be in leading names and indexes in a bull market. And at that point, you just let the market do the work for you, update your stops every day, and look for low risk entries in things that are working. And if you get stopped on something, that's the market giving you feedback, and ride the wave. So here are the numbers on the day. 21 over 21 down on the day. When I was doing the work over the weekend, I noticed a lot of our holdings, and we have outperformed the S&P quite a bit over the last about a week and a half. And things just get a little too extended to the upside, not so extended that we don't do offensive selling, but or to do some offensive selling, but allowing for normal pullbacks. And that's what we saw in several of our holdings today, normal pullback. So 11 up, one neutral, nine down, but down on an average of 0.34%. No real damage done to the portfolio, as on the day we were up 0.71%, pretty much in line with the S&P. The big eight, six up, two down, Amazon and Netflix to the downside, but up an average of 0.56%. The RG8, this is what we really like to see, up 0.86%, all eight of the growth ETFs in this Revere created composite up on the day. S&P opened up a 0.25%, finished up 0.77%, was up as much as 0.9%. Equal weight S&P also participating, so good for breadth. Equal weight up 0.73%. NASDAQ 100 opened up a 0.5%, ended up 0.84%. Equal weight also participating, just down a bit below that. Dow up a 0.5%, mid caps up 0.6, Russell 2000 small caps up 0.64, global 60/40 stock and bond up a little less than 1/3%. And I already touched on our flagship portfolio, GROTECTION, up 0.71%. Let's get into the charts. You can see the gap up and the higher high, all-time highs. In fact, this is best displayed on a 60-minute chart. The day after the Fed, the market gapped up, broke out of a range, and then went into a tight 14-day consolidation, which we broke out of last Wednesday, and just continue to make higher highs. Any pullbacks we would expect to be contained, as they were when we tried to pull back last Thursday, and expect to be contained by the top of this range. So this 57.65 to 67 top of the range, long as we're above there, and we keep making higher highs and higher lows. We're riding the wave, so to speak. NASDAQ 100, not quite at all-time highs yet, but broke out of a similar tight range on the same date and making a higher high relative to that range, not above the early July highs, however. Dow Jones Industrial Average, great looking chart, higher highs. You don't have to worry about this getting away from you because no chart is complete without a relative strength line. And you can see, although this is at all-time highs, it's just keeping up with what the S&P is doing. So anytime you see a bullish chart, you always got to put it in context of what is it doing relative to the S&P. That's why MarketSmith puts the S&P performance line at the top and the relative strength line below the price and the price action on whatever it is you're looking at. S&P 400 mid cap making higher highs, breaking out, good stuff there. Russell 2000 small cap, not quite at higher highs yet, but broke that downtrend line on Friday. We got re-involved buying URTY. That's the leveraged index ETF for the Russell 2000. And we're just going to keep trailing our stop up on this as well. Let's look at the equal weight RSP, equal weight S&P also making an all-time high, equal weight NASDAQ 100 making an all-time high before the NASDAQ 100. So it's not just the Mag 7 carrying things. There are other stocks absolutely being involved, and you can tell that just by looking at those equal weight indexes. Anybody tells you any different, they're arguing with the actual facts and numbers of what's going on. Okay, those are the major indexes. Let's look at some secondary indexes. We'll start with the VIX. VIX down on the day, but still a bit elevated. We'd like to see it below 16, but 19.7 will certainly take that. This means the VIX has more room to come lower, which minimizes volatility and is generally good for stocks. US dollar continues to work its way higher. The typical correlation between the dollar and US stocks is inverse, but not in the last 2 weeks. Market making higher highs as the dollar has been rallying. However, gold and silver, not quite as much. They've been more in a consolidation mode since the dollar has been rallying. That is a really nice looking consolidation on GLD. GDX, not quite as nice, but did break a downtrend line last week, and we're looking at this for a possible re-entry. Silver, failed breakout, still a good looking chart. Bitcoin with gap up 4.5% on the day, and everybody in Bitcoin land looking at these lower highs that we're making. We bust above 37.94. That would be the first higher high, also making higher lows here. So consolidating, looking for a breakout. This is a very nice looking consolidation. And we'll get re-involved with Bitcoin if we see the strength there. When I say re-involved, I mean buying IBIT. We've been involved by owning MSTR, which is a leveraged Bitcoin play, or acts as a leveraged Bitcoin play. All right, on bonds. Bond market closed today for Columbus Day. Didn't stop the ETFs from trading though. Broad bond index tight, just down a little bit on the day. TLT, the long bond, putting in a hammer and actually ended up positive on the day. The 10-year and the 30-year yields have been higher since the Fed cut rates, which is a reminder that the Fed only controls the short end of the curve. The market controls the long end, and that's seen interest rates rise over the past 3 weeks. There's the 30-year and there's the 10-year. That's our inter-asset correlation. Let's go to the tail of the tape. Yep, we're on the bull case, and earnings season kicking into gear with a bunch of more companies. It informally kicks off with a couple of banks last week, but more joining the fun this week. He's coming into today. We're watching on that breakout support, the top of the range, 57.65 to 67. We made a new high, not even testing it. The NASDAQ 100 490 was the support level, former resistance, now support. Above that as well. So the keys all turning in a positive direction. Day count up 3 of the 4 days since the breakout. 5th day above the 8-day exponential, 24th day above the 21. This seems like it's a lot, but I've seen this get as close to 50. I've seen this up in the approach 50 consecutive days above the 21-day moving average. And wouldn't that be nice to see again, rallying into the end of the year? Expectations remain positive as long as the S&P and the NASDAQ 100 remain above their 21-day moving averages. Gotta love the open 5 equals low. This means we put in the low within the first 5 minutes on the day, despite the gap up, and then just an intraday uh, slow melt up, higher highs and higher lows. As far as sectors go, 10 out of 11 spider sectors positive. Banks, semiconductors, tech, and utilities led the way. Bonds were mixed. XLE, the only of the 11 sectors to the downside, as well as GSG, that's commodities, EEM. It led to the downside by China as the China authorities didn't impress anybody with their uh, proposed economic stimulus over the weekend, and gold and silver down also. No portfolio changes. We remain at 1.56 adjusted beta. Bottom line on the day, ride the wave, broad gains across growth, value, and market cap. Keys for tomorrow, we're still going to keep an eye on the top of that breakout range, which has flipped to support and needs to stay as support. On the S&P and the NASDAQ 100, we're also going to start monitoring some overbought metrics. You can get too far extended from the 21 and the 50-day moving averages on the NASDAQ and the S&P and the percent of stocks above the 5-day. Connor was mentioning that on the call today. That's something we're going to keep an eye on as well. We'll update these every day. We pick the keys for the next day and then report the next day on what those keys did and how that trickles down to our outlook on the market. Ride the wave. Speaking of ride the wave, let me really quickly talk about some numbers behind it. This is an exercise, some stats that I keep every day. So, as you make progress in your portfolio, this was the middle of this is so we started with the follow through day in November of 2023 and progressing, cranking up the gains, peaked on 325.24, 28.8%. We always talk about our balance at risk. So we know if everything that we own, the stop got hit every day, that sets the floor for locking in the gains. So on 325, we peaked with the rally. The S&P actually peaked 3 days later. 3 days later. So our high was basically 29%, 4% to the downside. We knew the floor of our gains was going to be about 25%, and that came to fruition 3 weeks later when we got stopped on everything. We broke the 200-day moving average, and the rally ended as far as we were concerned and locked in the gains 24.3%. Fast forward a couple of weeks later, we got re-involved with the market as it got healthy. We had a follow through day, and here's the last month or so. So in addition to those making 24% off of that first move, we're up an additional 13.8%. This is a fully allocated GROTECTION portfolio. Since we re-engaged in the rally and our balance at risk, if all the stops got hit for everything we own right now, this would mean we were taken out of all of our names, and the S&P broke the 200-day moving average. That's 7.26% to the downside. So the floor 6.5%. So add 6.5 to 24.5. That's a 31% gain locked in if we get taken out. If you have no sell stops, or you're a pie chart or with an advisor that has no sell discipline, and we started a bear market tomorrow and lost 40%, these gains are banked for Revere clients because our stops got hit, and we'll monitor the overall health of the market. But we know from where we are right now, the downside is 7.26% below where we are, which would lock in a 6.5% gain and add that to the basically 24.5% from the first part of the rally. And that's what the exercise of raising our stops every day does. I do it at 10:30 every morning. Take a look at where every position is relative to either the 50, the 21, or the 8-day moving average. Set a stop a little bit below that level, and little by little the floor rises as the equity curve rises. So that's how we lock in gains in-house. All right, let's take a look at some charts. This is the 21 over 21 for this week. As always, if it has a green flag, it means we own it. So we'll go in order from largest gain on the day to smallest gain on the day, and then this will be the 21 that produces the stats for the end of the day each week. NVIDIA, I believe this is an all-time high close after that reversal lower after its last earnings and split. So not an all-time high, but an all-time high close, and re-engaging itself as the market leader. CEG, after bouncing off the 21 last week, adding 2% today. Seagate, a new addition to the 21 over 21, looking to break out of this real nice cup and handle, up 1% on the day. They do have earnings late next week. Guywire just continues to, this is a thing of beauty. Just when you can get a gap up and it just rides the 8 EMA higher, these are such easy holds. We don't hold it, but it is in the 21 over 21 list, and monitoring leading stocks just add to the confidence that we have to put client money at work. SE breaking out after a 2+ week consolidation. Kava, which we own, all-time highs up on the day. Axon continuing to ride the 8 higher. VRT continuing to ride higher after its very nice cup and handle breakout. Exxon Mobil pulled back along with oils, but with oils being down today, was up positive. Really a big move up on Exxon over the past 2 weeks and consolidating that move at the top of the flat base. Shark Ninja undercutting but reclaiming the 21 today. Oracle consolidating after its break higher 4 days ago. IoT went above the 50 level, undercut the 50 level, stayed back above it, basically unchanged on the day. Palantir, very strong stock, looking great. Sprouts riding the 8 EMA higher. F5 down on the day, above average volume. Didn't see any news on this. Basically, it's been going sideways for the last 3 weeks. Uber, really nice lower volume consolidation after a huge volume breakout of this flat base on Friday. This is our second largest position. Part consolidating 2 strong days up last week. Coherent reversal today off of new highs. CX monitoring this. This initially had this gap up when all the hoopla over China stimulus about 3 weeks ago, and then it's pulled back, making lower highs, and it's forming a nice triangle here. It undercut it, reclaimed the 21 today. It has earnings next week. This is basically a China commodity play. So we're using that as the 21 over 21 list to monitor that sector of the market. Stera Labs gap up on Wednesday, higher high Thursday and Friday. New product came out. That was the gap up last week. Downside reversal today, but certainly was extended. And notice the lower volume versus the 3 higher volume days. This is an example of things in the portfolio that are pulling back and why we didn't outperform the S&P today. MicroStrategy just has gotten a bit ahead of itself. Was extended near, didn't quite get there, but near +4 ATR from the 21 today. Pulled back right to the 200 level. And that is your 21 over 21 list for this week. And with that, I'm going to wrap it. As always, like to hear from you. Email's don@revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. If you're interested in becoming a client, reach out to my partner, Dan Stewart. Dan@revereasset.com. Dan, the master of all things financial. And as a reminder, our flagship portfolio is named GROTECTION because we have rules to grow assets in a market uptrend. And then, as I said, the trend is your friend until the bend at the end. If it starts to deteriorate, our stops get hit, and that's the market taking us out, not any decision that we make on an emotional basis. And if things tend to get really bad, we'll be out of the way. Here's the bear market in 2022. Once you break the 200, this is where all risk, all the big risk in the market is below the 200-day moving average. I mentioned we poked below it. We got stopped out last year. We didn't, where is that daily April? We got stopped out everything of our individual positions here. And re-entered after that. This is when we considered, I was wrong. I misspoke. I said that we broke the 200-day. We didn't. That was last November, right before we kicked off this big rally. and we were stopping our individual positions and hedged what we had left. That was why our balance at risk went to zero at that point. So anyway, that's how we do things at Revere. Common sense approach is the way I like to look at it. What other aspect of your life, if it's going bad, do you not take action to fix things? We see our portfolio as the same. Things are going well. Um, keep doing what you're doing. They stop going well, take corrective action. And with that, I'll wrap it for Monday, October 14th. This is Don Vandenbord with Revere Asset Management telling it like it is. Thanks for listening and have a great day.